You can, Corla, and I thank the deputies for the different points that they've raised, and will try to address as many as I can of them. Obviously, I don't necessarily agree with all of them or the premise made, but I do see coherent trends among them, a real genuine concern around inflation, genuine concern around house prices and increasing house prices and where that goes, and a concern around the targeting of supports most effectively, and I'd like to try to address all of those. As Minister McGrath said, this debate is happening in the context of a very significant inflationary environment, albeit 2% lower than we were last year, but still 5% ahead of where we should be on the ECB measure, and where we would be anyway comfortable. And that has a very significant cost of living pressure that deputies experience with their constituents on a day-to-day basis. And Minister McGrath has set out the response of the government to that, which was an effort a very extensive effort to introduce both one-off and permanent measures to try to address that. So, for example, in the budget last year, we had €11 billion worth of support aimed primarily at supporting households through this period of exceptionally high inflation. Before Christmas, those on social welfare received a double weekly payment and a Christmas bonus. Lump sum payments were made to people who are in receipt of the fuel allowance, living alone allowance, the working family payment. A €500 once-off payment was made to those receiving the carers support grant, the disability allowance, the blind pension and the disability pension. A further double child benefit payment was made to about 640,000 families. And also before Christmas, we had a series of electricity credits, and one was administered also last month, and the third one is planned for March. But there's also been a number of permanent cost of living measures come into effect, which some deputies have referenced, such as an increase to the entry point of the higher tax bands and an increase to tax credits. There's also been a general increase in social welfare payments of €12 a week, which came into effect. And we created a new rent tax credit of €500 for a qualifying individual and €1,000 for a qualifying couple, both for 2022 and 2023. And there's been significant changes to the National Childcare Scheme. So it's clear that the government does understand the inflationary pressures that people are facing, and has tried to introduce targeted supports insofar as possible. But it is not credible to simply go week on week to the corporate tax receipts. It is important to recognise that the receipts are highly volatile, dependent on highly volatile corporation tax. And if what we estimate is the windfall corporate taxes are excluded, there was an underlying deficit of approximately €5.25 billion last year. So we have to be very careful about the management of that and the sustainability of the public finances. And we are concerned about the inflationary cycle, and as Minister McGrath set out, a genuine concern regarding core inflation. And so in that context, mortgage interest relief, to my mind, is an unusual measure to try to advance at this time, having regard to the effect that it has. We know that mortgage, from the OECD, we phased out mortgage interest relief specifically because it impacts on increasing house prices. Mortgage interest relief for principal private residences was phased out as we know, as Deputy Shortall set out, between 2009 and 2020. And the decision to abolish it was taken in the wake of the financial crisis, with the cost of the relief being one of the influencing factors. At its peak, it cost over €700 million, as people know, in 2008, but also as a measure of contributing to rising house prices. Research from the OECD found that mortgage interest relief results in higher house prices, not lower house prices, where housing supply is constrained, as it gives buyers more purchasing power. There's also, the OECD highlight, and I would highlight also, significant equity concerns by noting that mortgage interest relief provides greater benefits to high-income households, as high-income households are more likely to be homeowners, a point which aligns with the findings of the 2009 Commission on Taxation. It just sits against the point of it being a targeted relief or targeted at the most vulnerable. It just sits against all of the international research. Mortgage interest relief has also been found to encourage household indebtedness and is correlated with volatility in the housing market. And it's for those reasons that both the Commission of Taxation and the OECD recommended limiting or phasing it out, mortgage interest relief on owner-occupied housing. Also, as has been said, prior to its curtailment and eventual abolition, in 2005, for example, it benefited best the top 2 income deciles, who accounted for close to half of the tax forgone through tax relief. It was again highlighted in the 2009 Commission on Taxation report. So mortgage interest relief puts up house prices, and it benefits the wealthier in the community by the scale of relief available. So it just simply isn't targeted at the most vulnerable, if that's where the effort if that's where the Sinn Féin private member's motion is attempting to target it. But I do have questions around the motion that was put forward by Sinn Féin in terms of its targeting. I'm not precisely sure whom it's targeting. I'm not sure which cohort of borrowers it's targeting. Is it targeting all 716,000 mortgage accounts? Is it targeting the tracker mortgages, variable mortgages, or those on fixed mortgages? What's the equity position versus between those situations? You know, in November 2022, we saw that over 93% of new mortgages created were fixed mortgages. A number of people will have switched who have moved to fix their mortgages, may have done so as the mortgage interest changes were well signalled, or the interest rate changes were well signalled last year. So it's unclear to me in what way it's been targeted. It's also not clear to me the costing around it. Yes, you've identified a figure of €1,500 on an annual basis, but there was no cost put forward by Sinn Féin until Deputy Stanley spoke, who I think was Sinn Féin's 11th speaker, and put a figure of somewhere around €340 million. Deputy Doherty might clarify that for me. But it's clear, you know, from a straightforward read of the 716,300 primary dwelling mortgage accounts at the end of September 2022, that for each of those to receive a subsidy of €1,500 would cost in the region of €655 million per annum, which is a substantial fund of money. A substantial fund of money, Deputy, and there's no point in laughing. If you can laugh that away, it's extraordinary. It's extraordinary that you can laugh away that kind of money. What's even more interesting?
Stupid argument.
I'm sorry?
Minister without interruption.
I'll tell you what, Deputy, what might be better is if you came into the House and costed your proposals. What might be better is if you signalled any interest in those proposals in your budget document. I think the word mortgage features once in your mortgage document. You make no effort to provide for private homeowners of any description, either in your mortgage document or your housing documents, but you are now interested in mortgage holders. You are now interested in the people who own private homes, but you made no effort. You made your budget choices, and that's fine, and I respect you making your own budget choices, but you didn't make this choice. And these interest rate changes were well signalled, and you didn't make any reference to it at that time. So allow me to finish without interruption, if you don't mind, Deputy Doherty. I don't need to be called stupid on the floor of the House when I'm responding to your motion, which is uncosted, to your motion, which would put up house prices. So allow me to finish. But the overall fiscal framework hasn't changed. The cost of living crisis remains, and the government, as Deputy Doherty and others know, is well aware of the challenges that people are facing. And in that context, in the next number of weeks, as has been well planned and well signalled on a sustainable basis, is considering which measures that were introduced in the budget to extend to provide the best, most targeted supports that will be of the broadest benefit to the greatest number of people. Those decisions have been signalled. They will also cost significant sums, and the government has to work out what is the best measure to take that forward. And Minister McGrath, along with Minister Donoghue, and the leaders of the different parties in government are considering that at this time. What I would say in my own role as Minister with responsibility for credit unions is that I see a substantial, it's a slightly different point, but I really want to make it out every time that I can. I see a substantial opportunity for credit unions to come more firmly into the mortgage market. There are significant sums in reserve. Their loan-to-asset ratio is too low at 27%. There is an opportunity to create another force in the mortgage market which has been uncompetitive in the Irish context because of the, because of the exit of different banks over the last number of years, over the last decade. But there is an opportunity for credit unions who are local, trusted financial institutions to play a much stronger role as community banks, to play a much stronger role in the mortgage market, and I would welcome that very considerably. And indeed, as Deputy Doherty knows, we'll be taking forward legislation to try to provide the structures that would support credit unions in that way. Thank you, Councillor Carl.